Hello, Maverick traders. Welcome out to your currency recap, April 1st. Hard to believe the first quarter is already done. We're always going to take you through meaningful news in the markets, talk about broad equity analysis, talk about where things are rotating, what's strong, what's weak, where's velocity, and then, of course, highlight our very best ideas in either Forex currency pairs, cryptocurrency opportunities, whatever there might be.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was kind of interesting in that there was more movement and more rotation than maybe what meets the eye. And by that I mean we gapped higher and then we sold off in a lot of these markets. And so the actual percentage change wasn't that dramatic, but you started to see some bearish engulfing type of candlestick formations. And this was all kicked off by a manufacturing PMI number that came in at 50.3, showing some growth in manufacturing versus a 48.5 expected. Now remember, anything sub 50 is a contracting recessionary type of number. So why would the markets initially cheer that on with a gap higher and then by the end of the day we've sold off? Well, this might be a case where we're starting to rotate towards good news is bad news, right? Good data means the Fed's less likely to cut, less likely to be accommodative, and we've been pricing in rate cuts. And so the more the market comes to the realization that those rate cuts aren't coming, that needs to get adjusted in asset prices. And that's a big part of why the US dollar is surging. It's pricing in fewer rate cuts. We'll look at that as well. So as we come in today, US dollar strengthened on this news. Again, stronger than expected data, fewer rate cuts, good for the US dollar. You really started to see the dollar take off and break out. That makes perfect sense. We talked about this. I traded the FOMC meeting with you live a couple of weeks ago. We talked about this dynamic that the market is just pricing in too many rate cuts, and therefore it should strengthen the dollar as the market continues to realize that those dramatic rate cuts are not arriving. Now, crypto really took it on the chin, not as much Bitcoin Cash, which has a US dollar element, as the other crypto pairs. Even things like gold really gapped higher, but then kind of gave back some of those gains. But we've talked about gold, oil, the commodity space has certainly been stronger. When you look at crypto, it looks pretty ugly, but Bitcoin Cash, again, has been a stronger area, and that's a little surprising to me. I felt like Bitcoin, which has been going up as well, is the safer play. And today you kind of see that where it's only down 3 and the others are down 5% plus. I would still sort of lean towards the Bitcoin space if you're playing in crypto. Again, there may not be a whole lot of opportunity there in the right here, right now. So as we look at the markets, a couple of things stand out. Let me jump into this chart. First, we've been in this progress where we have not made a lower low for months. So see all of these pivots. That pulled back but made a higher low. Here we had a pullback, higher low. This pullback was higher low than the one before it. This one, higher than the one before it. This was still higher, 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 higher. And that's the progress that we've been in. So each of these lows has been higher than the one before. We've been making higher or equal pivot highs all the way up and higher lows. And so you can't really argue that we're downward trending until this cycle comes to an end. Well, we know where the last pivot low was, right around 5,200. Your first Q, well, maybe not even the first, because today might be the first Q, which is we've got a bearish engulfing formation. Usually when a bearish engulfing happens, you at least stall out. So see one back here, we didn't make any progress for the next week and a half. We stalled out. Now, it didn't fall down, but it didn't go any higher during that period as well. This candlestick formation suggests at best we're going to go sideways. At worst, we're going to pull back. And how will you know that this has finally rolled over at least a little bit? Would be breaking the prior swing low, and for the first time in months, that would mean that we are now making a new lower low. We are below that 5,200 level, below the prior low. That would be a significant turning point for this market. So watch that level fairly closely here over the next couple of days. Again, the bearish engulfing candle signals that we're at least stalled out, if not worse. And we'll see. Maybe it just consolidates again and works it off sideways. It's certainly a possibility. As I mentioned, we had manufacturing PMIs that really beat expectations and went back to the growth side. We get some services PMIs on Wednesday. We get Fed Chair Powell speaking on Wednesday as well. And then the first Friday of the month, we've got employment data out of Canada and out of the US as well. So some employment data there, non-farm payrolls. The numbers on that, expectations are for a little bit of a downturn from prior numbers. Notice that the prior number was a pickup of 275,000 jobs. This meeting, there's only expected to be a gain of 205,000 jobs. There's also expected to be a little bit of an uptick in average hourly earnings. We'll see if that comes in. That number there would be very good for the consumer, very good for the worker, that they're collecting, that they're getting paid more. And we know that the economy is dependent upon consumer spending. Now, if we look at velocity, the US dollar, the Canadian dollar are the leadership groups. We've talked about the euro and Aussie, and I've been on board with the euro for some time. I do think it's finally kind of found its match in that I mentioned this about a half a week ago, towards the end of last week. It really looked like a rotation where you want to continue to buy US dollars and stop buying euros. And this is the first time in weeks that I've been on board with that. But CAD still looks fantastic as well. On the bearish side, you still have Kiwi and Swiss franc. That has not changed. So the bears continue to be bears, but there is some change in leadership on the bullish side. I don't know that the euro's in a lot of trouble. I don't know that the British pound is in a lot of trouble, but they seem to have stalled out at least and maybe not have the same velocity that they had before. Now, as we look at a couple of charts, again, Bitcoin Cash here, so you can see it's down sharply, but this is after a nice run. This in the crypto space is the strongest in that it's broken out to new highs. Well, it is Bitcoin Cash, so that cash component is a big part of why that's the case. Granted, if you still like the US dollar and you want some exposure to Bitcoin, I suppose this could have relative strength. But for me, I wouldn't be chasing up here in any of the cryptos. And then as we look at the euro, like I mentioned, this is the first time in a while it's really stalled out here. This was, to me, the signal. Again, it's a bearish engulfing, so notice that. And importantly, it wasn't able to really continue to hold those gains. So this was a bad reversal because you had broken out, you had successfully kind of bounced, and it should have some continuation, and it just didn't. And as you started to break down here, this is where you say, okay, bearish engulfing, starting to roll over. I'm not in euro anymore. And that would have saved you a little more weakness the last couple of days. And the natural rotation, again, seems to be in US dollar. So for now, I would just leave euro alone. I don't want to be short. I don't want to be long. I just think that that's nothing that I'm really interested in at this point in time. So there's not anything that really screams at you, hey, let's pile in, let's get in, let's make sure we're trading these. The trends that have been in place have gotten long in the tooth, things like euro, even on the short side. I mean, am I really wanting to continue to press the short side of Kiwi? Well, if I really like a trade, I can continue to short it, but I'm not anxiously engaged in just piling in and continuing to play that. So picking my spots, being a little bit more careful. Again, for the rest of this week, we'll send currency recaps. We'll finish it off with a trading room as always. So hope you enjoy the currency recap. Have a great week, everyone. We'll see you next time.